We're just a few minutes away from the start time, so we'll give it just a few more minutes to for people to trickle in. I'll probably get the lo-fi back up for about a minute, and then we'll get things started and let you guys kind of intro yourselves and start talking about Rari and go from there.
Sounds good.
Awesome. Is there anything you guys, no requirement for this, but is there anything you would want to like screen share or anything today, or are you good just voice?
We could definitely screen share and show the pool, or we can just do voice and like walk users through it, whatever's easiest.
Yeah, hey, Giantkin, if you're listening, you probably are. Could you get us a Zoom ready just in case? But we'll kind of decide partway through if we want to use that. All right, I'm gonna listen to lo-fi beats for 1 more minute, and then I'm gonna kick this off. All right. Well, we're right at 11:30 now. I think it's a good time to get things started, and we'll kind of just let people trickle in as things go. Um, Great. David, Jack, do you want to just start with quick introductions of who you are, and maybe yeah, let's start with that.
Sure, I can go first. My name is Jack. I'm a co-founder of Rari Capital with David. Prior to starting Rari, I co-founded a mobile wallet called Ambo, which was then acquired by MyCrypto, and that was really like my start in the crypto space. I was working on that for a couple of years, and then right as DeFi started to pick up, co-founded Rari Capital with David and then Jay, who's not here right now. And essentially, we have a suite of different DeFi products. So we initially started with the yield aggregator, which was sourcing the highest yields across external lending protocols in the DeFi space. And now we have this protocol called Fuse, which is a open interest rate protocol allowing for isolated lending and borrowing pools.
Awesome. Thanks, David. You want to give a quick intro?
Hey everybody, how's it going? So I've been a dev all my life. Co-founded Rari with Jack and also Jay back in March 2020. Launched Summer 2020. Just a simple yield aggregator. And then Jay came up with the idea for Fuse, and I built it as quick as I could. And yeah, here we are now. It's our flagship product, obviously. It's our bread and butter.
Awesome. Yeah, the we've been talking a lot about it the last week. This Fox and Friends pool that got set up at the DAO now. Oh, it's the ShapeShift DAO. We're really excited about it. I know it's still pretty nascent. There's not, there's about $500,000 of assets in there, about 200K in stable coins. We're hoping to see that get going more, but I think our community is really still just kind of getting their heads around what this is and how it works. Could you all maybe just kind of go into a little bit more of, overview and a deep dive of what Fuse is, what these pools are, how they work? That would be awesome. And if you do want to screen share at all, you can join that Zoom link that Giantkin set up. You'll see it in the stage chat just right above here, and he can give you screen sharing access if you want. But that's up to you.
Okay.
Sure. So I can give a rundown of everything. Basically, Fuse is the Uniswap of lending. So while existing decentralized solutions like Compound and Aave are limited by their centralization as single pools, Fuse, on the other hand, is a diverse and open ecosystem. So with Fuse, anyone can create their own lending pool with virtually any combination of assets, any risk profile, any interest rate models, any parameters, etc. And as a diverse and unlimited ecosystem of decentralized banks, Fuse hopes to be a utopia for lenders, borrowers, and liquidators alike. So all of these pools are risk isolated. So if any liquidation failures or hacks or anything in one pool will not affect any of the others. So that's really important for enabling all these long tail assets. There's obviously a lot of risk that you don't want to spread across the entire ecosystem, as you may have seen in the cream hack. But basically, to optimize for any risk profile, you choose any combination of assets. You customize all available parameters, collateral factors, reserve factors, liquidation incentives, interest rate models, etc. Support virtually any asset. Fuse employs a variety of price oracles, from Chainlink to Swap and Sushi Swap, TWAPs, and also just custom oracles for all kinds of things like LP tokens, Swap and Sushi Swap LP tokens, Curve LP tokens, vaults, etc. So each fuse pool it's actually its own instance of a modified version of the compound protocol, with optimized proxy storage patterns to minimize the gas required for pool and asset deployment. So again, each fuse pool is completely independent from all the other ones. So yeah, that's pretty much it. Hopefully that gives a good overview. Obviously, like our biggest pool is people levering up on their own, and borrowing stable coins against their own. And then we also have like phase pool, for example, reflexes pool, Tetris pools, where he's just letting people, borrow against pretty much, all these different assets that aren't available elsewhere. And then, obviously we have pools like ShapeShift pool, where, DAOs are coming in and allowing people to lever up and borrow against their native governance tokens.
Yeah.
And I'll just add like two more aspects to this. So oftentimes you have this chicken and the egg issue where you set up a fuse pool and you add all these different assets and users want to start borrowing, but lenders are not incentivized to deposit because there's practically no yield. So oftentimes when a new user sets up a fuse pool, we basically have two solutions to this, to getting borrowing liquidity there immediately. One of which is our yield aggregator, which actually helps to bootstrap these pools in their early days. And just to give some backstory on the yield aggregator, that essentially sources the highest yields from all the fuse pools and then delivers those yields to the depositors. So it both delivers high yield to the people depositing into the yield aggregator, as well as providing that borrowing liquidity that some of these early fuse pools need. Another feature that helps this chicken and the egg issue is the relationships that we've built with two stable coins called Fei and Frax. And basically, if a verified pool adds those stable coins, they will most likely be seeding that pool with capital, which gets really interesting because suddenly there is borrowing capacity as well as that protocol is now earning yield on the funds that they're lending.
Yeah, that is super cool. And I know the Fox and Friends is a recently verified pool. We're kind of hoping that one or two of those protocols will help help seed our liquidity. We've got a little bit to go, but it's still pretty small at about $200,000 of USDC in there right now.
Yeah, Fei and Frax will most likely be seeding that pool any day now. And we generally see Fei starting with at least $1 million per new pool.
Awesome. That's super exciting.
Yep.
We actually have two other ways that we're solving that chicken and egg problem. Also, like arbitrary liquidity mining. Anybody can liquidity mine their own pool, and that's already out. But something else that we're working on is, I guess, how do you call this? Like promising supply and promising borrows, or like having a rebalancer tool for suppliers, so that if there is no like supplier borrow liquidity in a pool, and someone wants to come in and borrow, there'll be this system where if they're going to pay the yield, then someone will automatically move their money from another fuse pool or wherever it is to the fuse pool where the borrowing needs to happen, and they can set up rules for that, so that way the lender is not missing out on any opportunities, but that way the borrower doesn't have this chicken and egg problem.
Very, very cool. Yeah, I've been really impressed with what I've seen with some of these pools and the ability to leverage against some of these long tail assets, and also the ability to earn really good yield on your stablecoins. I mean, I went through this process even just over the last few weeks of looking at the various stablecoin yields out there, and often the Rari pools were some of the best. I mean, even the Fox and Friends pool in its nascent form is offering over 15% on USDC right now. It was over 20 earlier this week. That'll go up with some borrows. What have you all been seeing with some of these pools and communities? Have people mainly has it mainly been the long tail assets that have been growing these things, or are you seeing any sort of other type of relationships get set up? What are the trends you're seeing? And how long has this even existed? I'm not sure.
Yeah, so Fuse launched in March of this past year, and we started with a guarded launch, where the end goal was to reach this permissionless pool creation, which just launched a few weeks ago. But in our guarded launch, every single new asset and every single new pool had to be approved by governance. And this just allowed us to continue building in the background and just follow this safe and secure process that we always like to do with all of our new products. But in terms of trends that we've been seeing, generally it's tokens that have either gotten denied from Compound or Aave or haven't even tried to go through their listing processes. Secondly, we've had a lot of DAOs reach out to us. Like, a lot of these pools are DAO owned or owned by individuals because these users really want to customize their lending and borrowing experience, and they can't do that anywhere else. So it's like, long story short, it's essentially DAOs, protocols, users who want to provide lending and borrowing on their assets that may not be able to be used on Compound or Aave, maybe because they're not as, maybe it's a little bit lower liquidity, not as safe, etc. Plus, DAOs want to be able to choose what their interest rate model looks like as well, and then how much users can actually borrow against that asset, and if you want users to be able to borrow it or not.
Yeah, that's so cool. I mean, even just this concept of DAOs basically being able to own their own borrowing and lending markets, I think is so powerful and so unexplored. And I hadn't even really thought about this as a possibility until I started to get to know more about Rari, over the last few weeks and talking with you fellas. Um, I think that's so powerful. I mean, and maybe that's something that would be helpful for the Shapeshift community here, is to just give a sense of and I don't know if this would be even good to show, if any one of you could hop on the Zoom link and maybe demo this, but a sense of the customizability the DAO now has, because I don't think our community really has a full appreciation for that, of like what kind of metrics can they shift. I mean, the fact that the DAO can even like turn on an admin fee if it wants is pretty cool. I mean, the DAO could be making revenue off of running this lending market it now owns. Like, what kind of things can it edit and modify?
Yeah, so I'll just start from everything that you can do within the Fuse pool. So you can choose all of the assets. So as long as there's a Chainlink Oracle, a Uniswap V3 price feed, or any Uniswap or SushiSwap TWAP, any of those supported oracles can be placed in a Fuse pool. The next thing you choose is whether or not you want these tokens to be able to be borrowed or not. So when you add these tokens to a Fuse pool, you can either click borrowable or not borrowable. And then you start choosing the collateral factor for each token. And the collateral factor is essentially how much you can borrow against that one token. And then you have other parameters like reserve factor. So how much is kept in the reserves in case the pool goes insolvent and you need to help people that are getting liquidated. You can have a admin fee, as you just mentioned. So where the pool owner, in this case your DAO, is actually earning a fee based on the pool usage. You also have the liquidation incentive. So this is the incentive that's going to the liquidators that are basically keeping the market solvent. And then finally, the interest rate model. We have a whole list of pre-built out interest rate models that follow Compound, Cream, Aave, etc. But as a DAO, you guys can come together and build out your own interest rate model per token if you'd like.
Yeah, that's so cool and so powerful. And I think, I know we were having a discussion about this in our tokenomics call just a few days ago. And I think, we're just starting to understand the implications of the various things the DAO might and community members might be able to do with this pool. So, yeah, thanks for that overview. I'm seeing a few questions from the audience. One before I get to that, I have one question that I personally have had that I'd love to get an answer for that I've just noticed with my own using of this. Does the way the pools work that like if you supply multiple assets on the collateral side, does it combine that borrow limit, or is it more isolated of like every time you borrow something, it's only against one particular asset? Because I wasn't actually clear on that. So is it compound Aave style where like if you supply Fox and USDC and wrap Bitcoin that you get the combined borrow limit of those, or can you only borrow against one a piece?
Yeah, you're able to borrow against multiple assets at the same time, as long as it's all in the same pool. Each pool is a modified instance of compound, so it does the same mechanics.
Cool. That's what I thought, but I wasn't entirely sure on it in my own usage. I probably just haven't supplied enough assets to know yet. Cool. Well, here we have some good questions here in the stage chat. I'll just read some of them aloud. So first we have an anon question, which is what will be the expected APY for supplying Fox? I can actually kind of take this one. So for the community in the current Fox and Friends pool, there's Fox borrowing is turned off, meaning there is no ability to borrow Fox. You can supply Fox as collateral, but you can't borrow it yet. The DAO could decide to turn that on, and if it did, there would be an APY for depositing your Fox because people could borrow against it. That's something the community would have to decide because obviously allowing borrowing of Fox can also allow shorting of Fox that way, and I don't know if we want to do that in our lending pool, but it's something we could decide as a community. The interest rate would just depend on how much is being borrowed. So if you actually go to the pool link that I put in the stage chat and you click on pool 79 info and then you switch it to Fox, you can actually see a really cool chart where you can mouse over and see exactly what the borrow and deposit rates would be depending on percentage of pool utilization. So, for example, if we did turn on borrowing for Fox and 50% of the pool was being utilized, then you'd be making 10% as a depositor on Fox. At 75%, it would jump all the way to 23. At 90%, it would jump all the way to 156. So that's all based on the model that's currently set up, and those models could be adjusted. So there's no one answer to that question, but borrowing for Fox would have to be turned on. Get to some other questions here that Jack and David, I think you guys can answer. So there's two questions here. One, what is the lowest amount for borrowing? And two, will the minimum be lowered at all moving forward?
Yeah. So right now, there is a minimum borrow amount of 1 ETH worth of tokens. This is due to the high gas costs that we've seen on the Ethereum blockchain, where we need to ensure that all positions are profitable for liquidators. So essentially, if there was a really small borrow amount, a liquidator would not be incentivized to go and bail out that position because of the high gas costs relative to the low borrowed amount. And then this would end up creating an insolvent market, which is not what we want to see within the Fuse protocol. So for right now, we're going to be maintaining that 1 ETH worth borrow limit. But as we expand to other layer 2s, we will obviously be removing that limit.
Awesome. Yeah, that's cool. I hadn't run into that minimum myself yet, but that's probably just because I've been borrowing over it. I know some others in the community had tried that. Another question here, and I think any plans for L2 deployment?
Yeah, I know David is working on this currently, but Arbitrum will be next. And then we're also looking into Optimism as well. Essentially, what we have to look for is oracles. So is Chainlink supported on these other L2s? And then DEX liquidity. So can you actually tap into these AMM pools on these other chains? So Arbitrum will most likely be the next one that we go after. But in the meantime, we have a sort of franchisee called Market XYZ, and they've already deployed Fuse on the Polygon network.
Very cool. So it already does exist on Polygon. We actually do have on Polygon. So maybe that's something the DAO might want to explore in the future too. It looks like there's a lot less assets on there, right? Though it's still pretty nascent.
Yeah, they are still slowly rolling out.
Very cool. Yeah. So yeah, that's awesome. So I guess one question that I had, kind of just looking at these pools and their utilization so far is so something that Aave does that I really like, and I'm curious if you guys are all considering this. So correct me if I'm wrong, but the way it works right now is that like for example, Fox has 70% LTV in the Fox and Friends pool, meaning you can borrow up to 70% USD value of the amount of Fox you deposit as collateral. Now that does mean, though, in reality, you can't really borrow 70% because that's actually the liquidation threshold, right? Is that correct, Jack or David?
Wait, sorry. Can you repeat that again?
Yeah, no worries. So I was saying, like in the current Fox and Friends pool, for example, and this is just me trying to fully understand on the community's behalf how this works. So like Fox has 70% LTV, meaning you can borrow up to 70% USD value versus your Fox collateral. But what that really means is that that's the liquidation threshold. If I put up 100,000 in Fox and borrow 70,000, I'm actually going to get liquidated, aren't I? So you have to borrow usually under that. Is that
Yeah,
correct?
so basically the collateral factor is like if like you divide by the collateral factor, or you multiply your collateral by the collateral factor to get your maximum borrow. Yeah, the total value of your collateral times your collateral factor is the maximum quantity you can borrow. But you want to borrow less than that because if you borrow your maximum borrow, you're probably going to get liquidated instantly. There's a 50 chance that you're going to get liquidated instantly if you borrow your max borrow, because you're like right on the edge essentially of getting liquidated.
Yeah.
So yeah, you want to like have some space there to not get liquidated.
Right. So if it's 70%, you obviously want to borrow less, and when you use our UI and you press max, it actually won't let you max borrow. I think it'll let you borrow at least like 85% of that.
Yeah. There's a limit on the UI. On the contract side, you can borrow up to exactly your limit, but obviously, you would never want to do that. So yeah, the UI prevents you from. I think it cuts you off at like 85% or something like that.
Yeah, that totally makes sense. And that kind of led to my next question of have you all considered, and maybe it would have to be a new version of these contracts or something, having like some buffer between those? Like this is something Aave does that I really like, is like they have a percentage that you can borrow up to, but their liquidation threshold is always a little bit higher than that. Is that something you've all considered at all?
Sorry, you said they have like explain one more time.
Yeah, so like I'm just wondering if and this is not necessarily a problem. I think your system works fine as is, but just one thing I like that like Aave does is um, they they say maximum LTV is this number and maybe it's 70%, but liquidation threshold might be 78% or whatever. Basically, they always have some sort of buffer between the maximum LTV that you can borrow against and what their liquidation threshold is. Have you considered, and maybe that's
Interesting. So like a contract side limit.
exactly.
Limit.
I'm just wondering if you'd all considered that at any point.
Yeah, we have not. I mean, we haven't really had any issues. Like, everyone's really using the UI. If you're using the contracts, like, you should know what you're doing. So, yeah, I mean, that's usually the assumption that we make. If you're using the contracts, you know what you're doing. But I mean, I don't know if we see any, issues in the future, then that could change. But
cool.
I think that
yeah,
the UI
I think it's a cool feature, but I don't think it's necessary by any means. The pool works.
Yeah, I think the UI is probably fine for most people. But that is an interesting idea. I didn't know that Aave did that.
Yeah. And you could probably, I think you could just do it just on the UI side, obviously, too. Like, for example, you could say, if there's a 70% LTV, in reality, we say kind of what your UI already does. You should only borrow 85% of that, and then your liquidation threshold's a bit higher or something like that. But anyway, a couple other questions from the chat. Someone asked, would the Fox and Friends pool need to be expanded if L2 other chains wanted to be considered, or is it all done within the same pool? I think maybe just a little more explanation of how that works, if how pools get onto other chains. I assume they're all distinct pools on the other chains, but maybe you can talk to that.
Yeah, they're distinct pools on the other chains. We don't have any technology to bridge the pools directly. We figure people can just use the token bridges, and that's that's all you need. I don't really see a utility to bridging the pools in any way because you still have to have the you still have the delay of bringing liquidity over. So I don't know. I guess maybe there's maybe slight gas costs that you could save there, but yeah, it's just distinct pools.
Cool. Yeah, that makes sense to me. Here's another question. I think this one might be worth you guys going into a little bit. LPX, one of our community members, asked, how does one become a liquidator? Maybe going into how the liquidations work, and if someone wanted to actually be a liquidator on Rari pools, how does that work?
Yeah, so anyone can be a liquidator. You just have to have a strong enough node to handle the request for whatever pool you're using. I guess some people have. There's systems out there that were built for compounding cream, off-chain indexing of that kind of stuff. But the way we do it internally is it's just with a smart contract based API. So you need running your own node for that, where you can remove the gas cap. Or you could just use some sort of off-chain indexing thing, but we don't have one of those built for Fuse. But I'm sure there's ones out there that could be modified for Fuse. But yeah, anyway, basically that's the Fuse Safe Liquidator contract that you'd be using to execute the liquidations, and then the Fuse Pool Lens is what you'd be using to get the liquidation data, to get all the borrowers and their health and their collateral and their borrowed assets and etc. So you can process that data and then send in the liquidations to Fuse Safe Liquidator. And we actually have that liquidator bot available on GitHub under Fuse Liquidator bot, Fuse-Liquidator-bot, and that uses the Fuse pool lens and the Fuse Safe Liquidator contracts, and also uses flash bots so that you're not wasting gas on failed transactions, and also the transactions are getting front run. So yeah, anyone can spin that up pretty easily. Fuse Liquidator bot on GitHub. The only challenge is just having your node, really. But if you're just liquidating smaller pools, then you don't need your own node. You can use Imperial or Alchemy.
Yeah. Okay. Yeah. No, that makes a lot of sense. Cool. So changing the subject slightly, but certainly staying on Rari. An interesting conversation that came up in our tokenomics conversation this week was some discussion around, potentially, some ShapeShift DAO members. This is still just an idea, but we're interested in the idea of maybe even building some of this, at least with the Fox and Friends pool, but maybe other Rari pools long term, directly into the ShapeShift interface. Basically, letting people borrow, directly in the ShapeShift interface, connect to Rari that way. I'm wondering. I know that you guys, all the Rari pools take a small fee that goes back to the Rari DAO. Is that would you all be open to some sort of and maybe this is something that would have to go to governance or talk, but do you think your community would be open to some sort of affiliate revenue share or something like that? Maybe sharing part of that fee if we started pushing TVL and assets through the ShapeShift interface?
Yeah, so I think that's a phenomenal idea to have Fuse integrated into the ShapeShift portal. So generally, Fuse charges 10% on all interest accrued. But what we've seen with several DAOs and Fuse owners is they essentially propose to our DAO for a discounted fee in return for a committed size of capital. So, for example, when Faye first started with their pool, they committed at least $10 million in return for a lower fee. So obviously everything has to go through governance, but I would definitely be a big supporter of this. I think either a lower fee or some sort of revenue split makes a lot of sense.
Awesome. Yeah, I definitely think that's something our community would be interested in, is quite bullish on based on our conversations even just a few days ago. Um, are there any other opportunities that you think we should be considering, or any other ways that the ShapeShift DAO community and the Rari Capital DAO community could work together?
Yeah, it'd be really interesting to hear your thoughts on, I guess, if the DAO would be interested in seeding the pool with liquidity, as well as the DAO actually enabling their own version of liquidity mining.
Yeah, great question. I definitely do think the DAO would be interested in seeding it with liquidity, especially with Fox collateral. Now, obviously, I think the DAO has to decide whether it wants to allow Fox borrowing or not in terms of that liquidity. And I think the DAO is definitely interested in using the pool itself, basically borrowing against its Fox for its treasury purposes. Um, the biggest problem is that the DAO does not necessarily have like a bunch of stablecoin capital today. I think it's gone through various treasury diversification conversations, and I think that will probably start to be the case, especially as some of our revenue streams start turning online over the next few months. Um, and I think it would be interested in maybe basically farming in its own pool. Basically taking some stable coins as it gets them and even depositing them for that purpose. So I do think it would be interested in terms of liquidity mining. That one's definitely interested. I would personally be supportive of that. Of like, in some ways, I think the best thing the DAO could do, even more than liquidity mining on the Fox ETH pool, which we already support, would be basically incentivizing some liquidity mining to get more stablecoin capital into this pool. So I do think it's something that the community would possibly be interested in, and certainly worthy of a discussion. And if we could do some sort of collaborative one, like put up some combination of like Fox and Rari governance tokens into the pool for liquidity mining. I don't know if that's possible. I think that's something that would be really interesting, that the community would be interested in.
Yeah, that makes a lot of sense. We could definitely explore RGT rewards. That would just have to go through governance as well. Um, but yeah, I think that'd be a great idea to like split up the rewards between both sides. Another thing I'll add is if you guys are interested, you can add that Fox ETH LP token to the Fuse pool, and then you can basically stream rewards through there, through the Fuse pool, rather than doing it directly through Uniswap or SushiSwap.
Oh, that's super. I didn't even really think about that, but that's super cool. So, correct me if I'm wrong, just to explicate this for the community. But the idea is the DAO could do it could do multiple things here, but it could actually add Fox ETH as a collateral asset, meaning that you could put up Fox ETH liquidity in the pool and then actually borrow against that LP asset. Um, is that what you're saying?
Exactly.
Yeah, that's super cool. And the DAO could even start to do that with its own protocol and liquidity that it's starting to acquire via the Olympus Pro bonds that the DAO is
Mm-hmm.
currently doing. So yeah, that's super interesting. I think I definitely would love to see the DAO add that as an asset, and maybe that's something we should look into in one of our future tokenomics call. I guess one question I have for you is just like, how have you seen other DAOs manage these pools? This was something that came up in the tokenomics conversations that we had earlier this week, of like we were considering maybe we need like a committee whose like job is to make decisions on like assets and various attributes of the pool. But what have you seen other DAOs do to manage these pools?
Yeah, so generally we've seen these DAOs build these smaller teams within their DAOs that are that their purpose is to like keep this pool successful. So for Faye, they have their own team that's working directly on this Fuse pool. So whether that's deciding which assets to add, deciding if they want to change their interest rate model, and deciding how many rewards they want to distribute for their liquidity mining program. And then for the Olympus pool, they have a policy team, and it's generally been their policy team that interacts with us based on like what they want to do with their Fuse pool. So I would say overall DAOs have basically allocated a certain amount of people to specialize in the Fuse pool development. Whether that's just carefully keeping an eye on it or actively working on it, such as creating custom interest rate models or choosing all these new tokens.
Yeah, very cool. Yeah, and this is something I'm personally interested in. I hope the DAO moves on soon so that we can more actively manage this pool, add other assets like Fox ETH LP, which is a great idea that are interesting to us. Um, one question on that: could we add, like, obviously most people that are doing Fox ETH right now are staking and getting their Fox rewards that way. Could you actually add like staked Fox ETH LP? I'm not even sure how that works. Or would it have to have like a derivative token like Stake Fox to do that, which we don't have today?
Yeah, so if you wanted to just plug it in without any additional code, then it would need to be an ERC20 token. I mean, Fuse can support any ERC20 token, as long as it's like an Oracle and a liquidator. But if there's no ERC20 token, then you could create a plugin. So that would just be like staking the asset when people deposit it and unstaking it when they withdraw, and then looking at the stake balance instead of the ERC20 token balance. And that's all like in the C token. So that would be like a custom C token plugin.
Very cool. Well,
But it makes it a lot easier. It's an ERC20. I'm not really sure. Do you know?
are LP tokens ERC20s technically? I think they are, at least in Uniswap V2. I know they're not in V3.
Oh yeah, but are the staked like? Does it give you an ERC when you stake it?
I don't think it does in our current staking contract, unfortunately. Maybe one of the devs in the audience can either type in the stage chat or come on stage and correct me. I'm pretty sure it doesn't, because we've talked about this, but we are. I know that in our recent tokenomics workstream, we have talked about maybe creating a new contract or something that would actually issue like an SFox or staked Fox type thing, and I think that would solve that problem. But that, I mean,
yeah.
even
If
go ahead.
there's a token representation of that, if there's an ERC20 representation of that staked asset, we'll be able to support it within Fuse.
Very cool. Yeah, I mean, even at being able to add your unstaked Fox ETH liquidity and loan against it is still super cool. So that might be a good place to start. But yeah, in my opinion, this just adds more fuel to the fire of conversations we've had around creating something like a staked Fox asset and the other various benefits that can come with that. And this is an obvious one. So I really like that. All right, a few other questions I'm seeing in the chat that are worth asking. So here's one from an anonymous community member. Have there been any edge case or unique ways that these pools have been used for so far? Something the DAO may not have considered yet.
Yeah, that's a great question. I would say every pool is used in its own way. So the Olympus pool, for example, that allows users to use their staked OM as collateral to borrow stablecoins. And by using that staked OM as collateral, you're still earning all of the rebasing rewards that you'd be earning if it was in the Olympus portal. So that's really interesting because every day your collateral is theoretically increasing and you'll be able to borrow more. Other interesting pools we've seen would be the Badger pool, where they have certain tokens like IBTC and like Badger Boost, where they're actually earning rewards through the Badger portal, but you can now earn those rewards while using that token as collateral within Fuse. So like overall, I'm super excited to see staked Fox tokens in Fuse because you'll still be able to earn all the staking rewards as well as have borrowing power against that token.
Yeah, that's such a cool idea and such a good argument for staked Fox, in my opinion. So, gonna hopefully keep that discussion going in our community in the tokenomics work stream, and hopefully we will be looking at that sometime in the coming weeks and months. Very cool. So another question here from LPX. This is probably more of a general DeFi question, but I'd be interested to know how this relates to Rari specifically, or if this is something that happens with fuse pools. But he's asking, can you explain what flash loans are? I've seen this many times elsewhere, but never really looked into it. So maybe you can talk about flash loans in general and how that might relate to Rari pools.
Yeah, David might have a better explanation on a technical level.
Yeah, so just in terms of like the risks, like what flash loans are and what the risks are when it comes to lending markets like Fuse.
Yeah, I think maybe just for this audience, not everyone even knows what a flash loan is, so maybe a general definition of what that are. But then, yeah, I'd personally like to know, yeah, what are the risks regarding flash loans and Rari pools, if any?
Yeah, so flash loans are unsecured loans, requires no collateral. You just have to pay it back in the same transaction. So you can't flash loan across multiple transactions. It all has to happen in one transaction. That's why it's called a flash loan. So basically, it's you just have to because it's all atomic. It's all in one transaction. It doesn't require any collateral. So anyway, that gives attackers a lot of firepower in certain situations. Because they have a lot more capital to spend than they normally would if they're able to do things, if they're able to do their attacks all in one transaction. So like for example, like when Cream was attacked, like they used flash loans as startup capital to make all those malicious moves essentially that they made. And normally they would have had to have a very large quantity of startup capital that they would normally not have had because they were able to flash. They were actually flash minting it. Flash minting is a thing that you can do on certain ERC20s like DAI, for example. It's basically a flash loan, but instead of actually loaning the capital from someone, you're just minting it and then burning it in the same transaction. But anyway, yeah. So the risk is just makes certain attacks easier because it gives attackers capital that they wouldn't otherwise have temporarily, for the span of the transaction. So yeah, I mean that's problematic in lending markets mainly for price oracle manipulation. So that's why we use TWAPs instead of spot prices. If we're using spot prices, someone could come in, flash loan, $1 billion from wherever, make some BS trade that shoots up the price of an asset super, super high. Then they use that as collateral, borrow out everything in the pool, and then they reverse the trade, pay back the flash loan, and suddenly their collateral is worth back to what it is actually worth, and they've borrowed out way more assets than they should be able to. So that's one example. But we don't that doesn't happen with Fuse because we use Chainlink and TWAPs. But there's still the issue of we do have like custom oracles as well, which we also need to make sure are not vulnerable to things like that. So yeah, I mean like TWAPs for whenever possible. It's just making sure that if we're doing any math on chain to compute prices, then we need to make sure that that's flash loan resistant, and that those variables cannot be manipulated in any way. And even if it, like flash loans aside, like still you want to make sure that nothing can be manipulated in any way. But flash loans definitely make the attacks a lot more powerful. So yeah, it just adds another reason to protect against it. Yeah, and then I don't know. There's also like things that you can do like block lock to prevent people from using flash loans entirely. But that does add some complexities for like something as complex as a lending protocol. It's a lot easier to implement something like vaults.
Very cool. So there is no you can't take a flash loan from a Rari pool, right? That's not part of the.
No.
Cool.
No, we're thinking of potentially adding that feature, but we haven't seen enough demand yet. I know Cream does that.
Gotcha. Okay, a couple other questions I'm seeing in the stage chat from the audience. What, if any, risks are there to the owners of these pools? So another way to ask this is, the DAO as the owner of the Fox and Friends pool, is there any particular risk to the DAO treasury in that way?
I mean, the risk is really on the lenders. I mean, I guess there's this borrower risk as well. But yeah, I mean, just anybody who's putting money into the system, that's where the risk is. I mean, if you just deploy a pool and you're not putting any money into it, if the pool gets screwed up, that's not. I mean, maybe people will blame you if it's like you misconfigured the pool or something. Maybe that's the pool deployer's fault or whatever. But if you don't put any money into the pool, you can't lose any money. But But yeah, like it's if you're a lender to the pool, that's when you know you want to make sure that you have your risks in order.
Cool, that makes sense. Here's a good one from one of our community mods, Hunt. He basically asked what sort of, so let's assume that the DAO either sets up a team of people or a committee or whatever you want to call it to be focused on and working on the DAO's Fox and Friends pool. What sort of specs should we be coming up with, or another like what should we be focusing on in order to best optimize these pools?
In order to best optimize them, in terms of what ways? Capital efficiency. I mean, yeah, I guess we can start there. Like, so reactive interest rate models are coming out soon. They're under audit right now. That'll just increase capital efficiency by like converging borrower and supplier rates. Like suppliers earn more, borrowers pay less because we're targeting a certain utilization rate and like adjusting the interest rate curve so that we do hit that target utilization. And that way we're like maximizing the usage of the pool without being too risky. Yeah, without we obviously don't want to have 100% utilization because then people can't, the lenders can't withdraw. So we target like 80% because that's like or sometimes 90%, but usually 80. Yeah, reactive interest rates will do that. So that'll increase capital efficiency. And then yeah, stuff like staking plugins. So for if we're adding LP tokens, we can stake the unused LP token cash, to pass on those staking rewards to the users as well. Yeah, and then let's see. Yeah, I mean plugins are really the main way that we're increasing capital efficiency on fees. But otherwise, I'd say fine tuning your parameters. But I mean again, like you can you want to maximize capital efficiency while staying conscious of the risks. So obviously you don't want to set your parameters too high or too low, or you know what I mean. Like obviously you want your collateral factor to be as high as it can be, but you don't want it to be too high because then there's risk of liquidator malfunction.
Yeah, that makes a lot of sense. Very cool. Here's another question from an anon in the community. I don't really understand this one. Maybe you all understand it better, but I might not understand the history of Rari as well. But they ask, have the Rari Capital REPT pool exploit victims been fully compensated already, or are the bonds still for sale? Maybe you all can explain if you know what he's talking about, because I don't.
Yeah, so there was an exploit in one of the pools in May that was basically sourcing the highest yield across different lending protocols. And REPT is essentially a bond that was distributed to all the users that were affected. And right now on the forums, you'll see a proposal that has been put together by several community members that hopes to initiate some sort of repayment process.
Gotcha. So they kind of got I assume, a bond that was kind of a more or less an IOU representation of whatever their losses were, and the idea is to basically pay back those bonds somehow.
Yeah, based on protocol revenues over time.
Very cool. Awesome. Yeah, so we've got about 13 minutes left in this call. This has been really, really awesome so far, and really clearly the community is finding it interesting because we started with only 20 or 30 people listening. We've now got 100 plus. So the community is clearly interested in this topic. I would like to invite, if there is anyone who wants to come up and ask a question on stage, to please raise your hand. Might have some interested community members with interesting ideas who haven't asked them. But otherwise, we'll just try to use these last few minutes as best we can, talk a little bit more about this. Is there anything that you all might have a question for our community, or anything that you'd want? I see Michael just hopped on stage. Hey, Michael, please go ahead.
It's awesome. That is all.
I'll take it. Yeah, I think a lot of people are very excited about this in the community, which is great. Go ahead, David.
I was just say I got another meeting that I got to run to. But thank you all so much for coming. Had a great time. Super great being able to answer everybody's questions and give an overview on getting into the details.
Yeah, this has been great.
Thank you, David.
Thank you so much for your time, David. And yeah, talk to you soon.
Take care, everybody.
But yeah, your question was like if we have anything for the community. I would honestly say like this pool should be owned by the community. Like anything you guys want should be integrated within this Fuse pool. So I just think having this open relationship where if you guys ever talk about tokens that you want in this pool, if you ever want to change your interest rate curve, we're always available to help you, but everything can be done directly from that DAO owner.
Yeah, that's great, and really appreciate that and all the help so far and coming and doing this. Yeah, I know, and I know for the community, Rari is actually doing a community call in their Discord later today. I think it's at 4 p.m. Pacific time. Yeah,
Yes.
so 5 p.m. Mountain for a lot of us, or 7 p.m. Eastern. So I'm actually going to go join that and just talk a little bit about the Fox and Friends pool there, and what we're doing with it at the ShapeShift DAO. So anyone in our community is more than welcome to join that if they want to listen in. And that actually relates to a stage chat question we just got, which is from Ron. Is there Discord social links that we should follow to be able to follow Rari Capital more closely? Maybe you just want to throw those in the stage chat if you get a sense, Jack. Get a chance.
Yeah, I will send in the Twitter and the Discord right now.
Awesome. Great. So we'll put those in the stage chat for anyone who's interested. And then it seems we're kind of getting to the end of our time, or at least I'm not seeing any other additional questions, and I've certainly had most of mine answered. So I'll do one last call to the community. If you have any other questions for Jack, well, we still have him for a few more minutes. Either post your question in the stage chat or raise your hand to hop on stage. And if I don't get that in the next minute or so, I might just go ahead and end this call. It's been a great one. So yeah, Jack just posted the website for Rari Capital, the Twitter link, the Discord link. So definitely feel free to look at that. Maybe join their Discord if you're interested. Follow them on Twitter. And yeah, we look forward to the opportunity to collaborate more with the Rari DAO going forward. And just super excited about this Fox and Friends pool and everything this allows the DAO Treasury to do now, being the owner of this pool. So with that, Jack, just want to thank you for your time and coming and talking with us today. This has been really awesome. Clearly, the community is excited and interested in this, and look forward to talking with you more soon.
Yeah, thank you so much for bringing me on. It was amazing to be able to talk community. I'm really looking forward to this long-term relationship that we're going to build between Fuse and ShapeShift. And if there are ever any questions that you guys have for me, either development questions or just anything general, I'm always available. And I'm really looking forward to growing this long-term together.
Yeah, thank you so much for that, Jack. And that is fantastic. I think we're really looking forward to it too. I know I personally am, and everyone I've talked to so far about this pool in the community has been super excited about it. So hopefully
Awesome.
It's a long and fruitful relationship between our DAOs.
Definitely. And then remember, 4 o'clock Pacific time today, we're having a community call in the Rari Capital Discord, and there's a link to that in the stage chat.
Awesome. All right. Well, with that, I think I'm going to end this call here for today. I'll get the lo-fi beats back on the stage to hang out. And thank you, everyone in the ShapeShift community who came and joined. Really, really great call.
Thank you. Have a great day.
Thanks, everybody.